Okay, getting going here. Hope everybody's doing well. Obviously, just taking a quick look at the Russell. Really large move following yesterday's Fed release, which is obviously we're getting short term extremely overbought, but in the long term, considering how much the Russell's lagged, I think this is a positive development. And Mark has been saying we're expecting some rotation to the smaller cap area. And also using some of the short-term strength to, nail down a few profits on some things that are extended. So yeah, let's get to some questions, see what you guys are thinking. James is asking, given the huge run up in the indexes, we're likely on the verge of a pullback. If stocks were breaking out of good buy points, would you still be buying them now, or is it better to wait for things to pull in and reset first? Good question. Listen, your idea of if stocks were breaking out of good buy points, the answer is yes. As when stocks, rather than looking at the indexes, make it really simple. What have your last two breakouts done from a good buy point? If those are working, doesn't matter what the indexes are doing. Now, we had people asking this question, 3 weeks ago. Oh man, back when the market was down here, or say the Russell was in this area, people going, oh man, this is really overbought. A number of people looking at stocks like Lennar going, after this run here, oh wow, this looks overbought. And now look how extended we are. And for those of you, by the way, wanting to play the home builders for a potential bigger move. I mean, this stock is nothing but this is just confirmations, out the wazoo here. Obviously, this is ripe for a pullback. So if you're going to be playing a name like this for a bigger move, you need to know that that's potentially coming. But so I would be far more looking at what have my last 2 or 3 breakouts done rather than what have the indexes done. Keep in mind, the more overbought we are, though, some of the best names have already moved. So you either need to wait for them to subsequently set up new pivots or see, do we get another wave of new ideas?
And James, right now, like that's what I'd say is there really aren't many viable pivots today, right? Everything's kind of come out. I mean, if you look at FN from earlier, it broke out, I believe, on Friday. Marty, you want to pull that up real quick?
Sorry, which one?
FN. That broke out this week. Or was that Friday?
No, we highlighted it on
Monday. So here's one that broke out and is now accelerating. Now, like we did today on some of the names, we kind of sold into some names that are getting extended. MLM's another one. So the stocks that were set up this week are already out. There's really not much going today. I mean, Apollo tried, we flagged that, but that's a name we already own. So
Arun saying, how do people achieve consistent triple-digit returns in all market conditions like in the USIC? What are they doing differently compared to the strategy we follow? I don't know what you're referring to there, Arun, in terms of the strategy we follow, in terms of the strategy teaching here. If you look at, a majority, of the people even in the USIC in terms of the top 10 are often our clients. So the same thing. Now they might be doing shorter term trading or, a lot more trading, than say just swing type trading. But yeah, I would argue nothing. And they're just being more aggressive in those opportune moments and times and managing the risk really, really well. See, Michael's saying he bought iron. Let's take a peek at that. On 11.4, sold half on 12.8, wanted to hold the rest for a bigger move. The larger reversal with huge volume on 12.12 is a major red flag. I decided to sell all. If it doesn't recover to the end of the day, would you have sold even earlier? So you bought on 11.14, which I'm assuming we're hoping is right here. Okay. So you bought there. It's a good buy point. Sold half on 12.8, which is this day here.
Good sell.
Yeah, I mean, this is as it's getting extended here. You're taking, de-risking the trade. That's classic. It's great. Large reversal with huge volume. Two days ago, decided to sell all. If it didn't recover to the end of the day, I think is what you're referring to. Listen, I think that's a fine plan. This is where, okay, I'm just doing some measuring here. Let's say you're buying through this little pivot. Maybe you put your stop right down in here. So you're looking at, say $2 and change. You're at where you took profits, you're at, you know, maybe a 4, even 5R, depending on how tight of a trade you were. And, you know, then you get, you know, this big reversal. Here's where you have to ask yourself, you know, if you want to play this for a bigger move, you're going to have to sit through a pullback. So this is what you have to make a determination. And I would handle this one of two ways. If I knew I was going to play this for a bigger move, or that was part of my plan, you have to switch over to some type of, you know, 50-day break even or better, which you can see now the 50-day has caught up with your original entry point. But whatever you're not willing to give up until that point, that's what you have to trim the position to. Or you set some type of a percentage backstop, and then you get, you know, a major violation like this, you can step aside. So I think you handled it fine, assuming that your plan was to stick with the trade so long it was working. And then when that, you know, big reversal came in, you know, absolutely right. That was, you know, since the beginning, at least of this short move, you had the largest range on the biggest volume in a reversal. Well, it's probably got some supply now to contend with. So I would only be holding it if I was planning to hold a piece for a bigger move. And as I said, I would do it with smaller, you know, amount where it already de-risked the trade.
Yeah, and I'll just highlight too the fact that you kind of came up with a plan, and then hopefully you stuck to it as it didn't recover, and you sold it. Like that's those are good tactics.
Michael's asking about some post-trade analysis. Do you put break-even trades into their own category separate from wins and losses is his first question. We don't. And generally, you know, usually it's not with commission and absolute 100% break even. So if it's a tiny gain or a tiny loss, we just put in those categories. I guess if it came out at an absolute 0, I'd probably just put it in a lot, you know, in the loss category in terms of the opportunity, you know, cost. If you sell the first half of a trade for a 10% gain and the second half for a 5% loss, do you average those pieces together and record the trade as a small gain, or do you track the two as individual trades? One is a win and one is a loss. You can do either. I would just suggest that whichever you do it consistently. And we do the former, meaning, yeah, I would track it as all as one trade. That's how we do it. Timothy's asking, can you and Brandon explain why I nearly always buy MPA stocks like NVIDIA or BRO instead of Lennar or DHI? Maintained diet discipline for a number of years, bought MPA stocks after they'd broken out. My average win, 11%, average loss 3.5%. That's great. Lower win rate. I've been, let's see, read Mark's book several times. Mark and yourself refer to zigging when the market sags, but this bad statistical luck lasted years, not a couple of months. I feel like the guy at the roulette table that keeps betting on black while red comes up more than 30 times in a row. Well, what you seem to be referring to, Timothy, is are you the most unlucky man in the world? No, I don't believe that's the case. So without knowing, I mean, we've had a number of names, not just Lennar or DHI on Focus, that are working. Will there be times where, you know, you're in names that don't? Sure. You know, we were heavy in this name earlier and got knocked out of a good chunk of it. So that's just part of trading, where, you know, I wish I didn't buy either Lennar or DHI. I wish I'd put my entire account in these. Anybody can say that in hindsight, of course. And this is one thing I do want to just add. You know, if you have stock envy right now, meaning you own names and you're doing well, and you look at other stocks and those are doing well, that's a good sign. That means you don't have to be in all the winners to make money. You know, we've been long and getting longer and jockeying for a position like everybody else. And there've been plenty of what look like good trades that we haven't taken. That's good. That means, you know, that the list is growing and you don't have to be in all the winners. Now, listen, eventually, if you're really using good tactics, no one stays unlucky forever, just like no one stays lucky forever. Now, I would guess that, yeah, that's just a function of, you know, this particular period. But, you know, I don't know, Brandon, any color you want to, you know, add in terms of when you feel like the market's putting the screws to you while others are doing well?
Yeah, I mean that's just part of the game. I would also just add, like, listen, we're still in 2023, our win rate's lousy. We're not happy about it either, but that's just the market we're in. So, to Marky's point, you want to have stock envy now. That means things are getting better. We haven't had stock envy in a long time.
I had the opposite.
Right. So it's probably prudent to move a little bit slower. But the question I would ask you is, why did you pass on Lennar and DHI? So think about that. If it was more of a, hey, I just chose to pass on, well, that was your decision, right? Or if you missed them, you missed them. Let them go. But if we're just like, I'm not buying this breakout, well, then you have to ask yourself, well, why didn't I buy it? So that's what I'd ask. That's where I'd go I'd ask you a question. So answering your question with a question.
John's asking what to do when I'm 100% invested and the returns are average, but new setups show up. In my case, 14 positions ranging from down 2 to up 11, but I'm seeing tempting new setups. Do I sit on my hands, ignore the new ones, and wait for existing positions to hit stops or targets? Should I exit positions early to catch new setups? Great question. And this is where I think the first thing I like about the question too is you actually put in terms of where you are with the existing positions. So how much cushion do you have? The other thing I would be asking is, okay, if you're 100% invested and you're up net, but you correctly recognize, if things sort of turn and bank on me here, I don't want to go underwater. And this is where you kind of have to run some calculations and figure out how much risk are you comfortable carrying, and how aggressive do you want to be? And if you're seeing new ideas, but you don't want to take more risk, because you also suggested, hey, should I sell maybe some ones that, aren't acting as well to buy new ones? I would say only if you don't want to take more risk, or this is where you can make some sort of portfolio decisions in terms of tightening things up. If you're going to go on margin, though, you need to know quickly where your pain points are and to get off margin once you start feeling pressure. Doesn't sound like you're feeling a whole lot of pressure, but you're saying, I'm not getting a ton of progress. And this is where you take it position by position, stock by stock, and then in terms of what you're comfortable with. But this is how, I've done it every time in terms of, even right now, we're in sort of a similar position, about 100% invested. We've trimmed some things, we've jockeyed some things. If we see another wave of ideas, though, we're gonna keep buying. And that's how, I don't sit there with a running total going, am I on margin? Am I not on margin? I just buy. When things are working, I buy, and then I buy more. And if I can get even more aggressive, I get more aggressive. So I know it's not a concrete answer, but yeah, I would look at each position in terms of how much pressure, they're going to potentially put you under should things turn, and then maybe where you could tighten things up if you want to add more, without, again, using progressive exposure to say, I'm not just going to wildly keep buying and not, moving up stop points, or even some trailing stops on ones you're up double digits on. Pascal is asking, hi, Mark and Brandon. Today, the platform reduced CRNX at 9.26%. Stop was 8.5, not close to 2R. Financing only part of the position. Likewise with PRO, which was reduced around 78% when the stop was 8.5. Reading Mark's books numerous times, I've only remember reducing it 2R would finance the stop. Is this a practice of reducing around 1R, or so a common practice, or is it waiting for 2R to finance risk more of the common practice? Well, first things, the stops are suggested stops. You can always go tighter. Secondly, okay, here's a situation. I can't remember what the stop was on DHI, 2 or 3%. And here we're taking profits at 15. So you're at, a 5R there. And the idea, in a certain, look at CRNX. This is where you have to make the determination, where Mark is saying, yeah, we're short-term extended here, and we've got, now the market short-term extended as well, and we've got a number of names that are sort of short-term extended. So you can reduce some or reduce where you want. But okay, if you reduce one where you're up maybe just over 1R and another one where you're up over 5R, what's the net? You're still up and reducing at a positive of 2R. So it's keeping both of those in your mind, if you will. David's saying, trying to improve my take profit plan to hold larger positions for longer. Let's see, bought a firm on 11/14. Sadly, a pilot position. Okay. First of all, when pilot positions, well, if you bought this on 11/14, the sad part is this entry point. And I'm only being slightly facetious. This is not a great entry. You're buying a stock that's gapping and there's no pivot there. Making sure I understood that. The only pivot I'm really seeing here, I guess, would be this, this day here. But what I was going to say about pivot points or pilot positions, sorry, is that the goal of the pilot position is to test the waters. You're not looking to make a fortune on the pilot position. You're looking to see, should I even be willing to get back in the water? Sold a third to finance at 25% on 11/28, another third at 60% on 12/9, holding a third piece at the MA. Any thoughts on my management from the point of view of the stock action? Well, I like how you're taking profits into strength, and now, keep in mind the 50-day is now a long way away. So you have, again, if you want to play this for a much bigger move, this is a big move. From where you were buying it, this stock is up 20. Yeah, sorry, I'm the measuring tool here, but 70-80% just eyeballing it.
Yeah, 75.
I mean, that's a big move without much of a pullback. So that's where you just have to assess it. At one point, this is where I would even say, if I'm playing something for a bigger move, I also have this idea where if the stock starts to go parabolic, where everybody's a seller at some price, guys. So even to have that in your mind to say, this thing gets wildly extended, which this stock is clearly doing, I would be ratcheting up some form of a backstop. Now, if you're a longer term player, then you're right. You've got to give it room, which means this stock could pull back to, easily into here and before building its next base. So just keep that in mind.
Well, I think too, when you have a longer term hold, it's not just the pullback, but the time that you're going to be spending in a pullback, because that money that, you sitting in a position, that time is money, right? So it's, to Marky's point, you're up 75%, to get another, I don't know, 30, 40, how much more, you're gonna have to potentially sit with this name for a long time. So, listen, you take profits at 70%. You do that a few times a year, that's going to add up.
Absolutely. George is asking about VRT. Was watching this name November 13th and it broke out of a high handle on a 32-day base. I don't know what a 32-day base is, but I didn't buy the name because the technical stop would have been almost 7%, which is a bit higher than I'm comfortable with currently. I purchased the stock on paper at 42.21 with a stop below the low of the day, or the low of the day at the open at 40.22. Turns out it would have been a decent buy with a further buy point on 11.29 at the highs. Okay, waiting for the question here. Sorry. I keep staring at this chart and do not see what MM was looking at on Monday to be considered this for focus list. Well, I think the idea of, Monday was to see if the stock was going to, was it last Monday, Brandon, this was put on
I
focus?
think that's right.
Yeah. And it was a little bit short.
No, it was this Monday.
Was it this Monday? Okay. Well, it's obviously because it's been extremely strong and, maybe thinking we get some type of a pullback, back to this, back to this level,
Right.
Might be potentially viable. But looking at, not really. Look, the chart, the time to look at potentially buying the stock for me was over in here. When it was trying to come out of this little right side. We had these couple of reversals. You had reversal here, reversal here. I remember we looked at this. It's sort of, you kind of had a mini little, you had like a mini little 3C right here. That you could have tried to play it right through this cheat area right there, and then maybe added the position as it comes, through that level. That's how I would have played it if I was going to be in the name. And right now, it's just, look, it's been strong. It's short-term extended. You just leave it alone. As far as your comment on which day was it, November 13th? Which ironically, I think is the day I was sort of pointing it out. I think you're saying maybe the 14th, that's a, you could have bought this on a gap or yeah, buy it this day here. It never really got really tight. So this would have been the day to buy it. You're right, on the 13th, I would have put my stop, probably down in here somewhere, 30, 39, maybe a split between 39.50, 38.50. Again, at 42.5. Yeah, that's, you're looking mid-single digits. So it was a little too wide for you. I think you did the right thing. If if the stop's too wide, you don't trade it. That's how we do things all the time. We don't sit there and go, well, it's too wide, we'll just trade it anyway. Do I think Amazon was buyable yesterday? That's from Toby. Yeah, I think it is. High handles in the mega caps, to me, it just feels like a recipe for a shakeout. But it's been very strong. So I see what you're looking at, and keep in mind, the mega caps have stayed strong. It looks like money might be rotating away. You even get this reversal here today, where with the market, being up so strong, why isn't Amazon and Microsoft and some of these other names? Well, because money's rotating. It's rotating out the risk curve. Well, that's what we want to see. But doesn't mean this won't stay strong. I'd like to see it build, even more of a base. Maybe it sucks some people in. Maybe you get an undercut, something like this. I would love to see it, build something like this. And then if I'm going to play the mega caps, I like to play them more off of like the cheats and low cheats. Just because, again, there's so many eyes on them, and when they break the new highs, they tend to be a little bit more failure prone, at least in my experience. Greg's asking, if your potential drawdown is getting large and you aren't willing to give it all back, can you describe how you decide what to trim? One of the things I'm unsure about is reducing the best acting names, the largest potential drawdown, compared to other positions that are working but haven't made as much progress. Initial risk is all finance. It's a matter of protecting initial gains. Well, and Brandon, feel free to jump in here. This is where you tend to look at, what are the names that are acting the strongest? Monolert can be helpful here too, in terms of deciding which ones do you want to give the benefit of the doubt to. But listen, when you're at a multiple of initial risk, that's where I just favor de-risking. And this is sort of when I know some guys that will take much bigger pain on open positions than say I will, and then there's somebody like a Mark Minervini who doesn't want to take once he's at multiples of that initial risk, he doesn't want to give any of it back. Well, that's part of that's personality. So I think I again, stock by stock, position by position, and then having that number in your head in terms of where your total risk is really important. That's the biggest one. What you don't want to have happen, Greg, is wind up having everything hit losses and go, oh, I couldn't have imagined I could have lost that much money. Well, you should have known that ahead of time, what you had on the table.
Well, I think to Marky's point, selling into strength is why it's so important. It just gets you're in a much stronger position because you've now rung the cash register. Today's a good example. We took off, 1, 2, 3, 4, 5, 6, 7, stocks that had gains in them that pads your portfolio. So that gives you the ability then you don't have to really make those. You don't have to make the tough decisions that you're describing here, because
you can make them from a position of strength. Exactly. Is what Brandon is saying. You're
exactly
rather than things are turning around on you and you go, oh my gosh, what am I going to do?
Right. When that money's booked, you're not going to draw down from that anymore. So yeah, that's why selling into strength is really important.
Renee's asking about DT. You rate my buy pivot was 55.16, stop loss 53.45. Can you also say something to the quality of the setup? For me, it looks like a cup with handle since 8. I don't know that you gave us your 55.16. So I'm guessing you bought it maybe today.
Yeah, so you're saying today. Yep.
Yeah, this just looks really short to me. And a number of things. If I was going to play this, I would definitely use, this would be my worst case scenario in terms of stop, because anytime the stock has had you've run up the right hand side. This is really a 3-4, just a natural reaction, almost not. It's not a base. it's not much of a pivot. Yeah, you're running into, you know, supply here on the left-hand side, you know, relative strengths 88. Yeah, I just think there's been better merchandise over the past, you know, 3-4 weeks. So yeah, I wouldn't grade either. The entry point's the problem, in my opinion. Like if you play a lot of entry points or study this as an entry point, just look at this right-hand side and then, you know, read Mark's books. You're not going to see this. Look at the Master Trader Program manuals if you attended there. You're just not going to see, you know, the right sides that, you know, where we're buying that look like this. Suad's asking, I'm currently 71% invested. If I get out of everything today, I'll be up 1% on the year. But if I let everything stop me out, I'll be down 2.5. All the trades have taken currently are below my average gain. Below 2R based on the feedback of recent breakouts. My thinking is to risk being down 2.5% with the possibility of making multiples of that risk. On the other hand, I know Mark Minervini talks about the index is being extended. It would be a good opportunity to sell in the strength. I would appreciate your insights. Well, you don't have to do one or the other, like we just discussed. Now, if you're saying that, you know, most of the gains you're holding are, you know, sort of below average or haven't really gotten going, this is where you've got to make that determination. If you feel like you're carrying too much risk, you have to reduce. But I can't, you know, sort of like saying, what are you more comfortable with, Suad? Like, I can't tell you that. And what I would say though is if breakouts are working, I'm always tempted to go with the breakouts. Certainly not my feelings. You know, to say, well, you know, the last couple have worked, but the next ones aren't, so I won't take them. I would do the opposite. In fact, if I, you know, and this is precisely what we're doing, we're willing to lean on the gains that we've made over the last 3-4 weeks to try and lever up more if we get, you know, if we continue to see more ideas. I would not get, look, the indexes are going to pull back, but it doesn't mean the leading stocks will, or that
you get stopped out. Right, exactly.
So, and let's say you do get stopped out of a number of names, indexes pull back, and then we get a whole nother wave of setups. What are you going to do? I've had that happen many times. You just have to be prepared and not get so married into, well, if I do it this time, it doesn't work. No, it just means, yeah, again, maybe you jockeyed at the wrong time, you zigged and the market zagged. The point is, if you're able to get yourself properly exposed and didn't take much overall risk, that's a win, because eventually you're really going to nail it. And then you will have taken a much bigger step forward than you otherwise would have. So, and I don't know, am I making that clear, Brandon?
Yep.
Hugh saying, I noticed the platform bought Booking. Bring that one up. 31.75 on December 1st. Could you explain why you didn't buy it when it took out the high on November 30th as a pullback buy? November 30th. Oh, I see.
That is the pullback buy.
Yeah, that was the pullback buy. Well, you could have. I'm trying to remember exactly. This was again another one of these situations, and this is sometimes what you get. So, what is forming this handle here? And this is where, you know, you had with the same thing in the home builders. We tried this in NVIDIA. You know, we worked here in Booking. I think we took a tiny loss on this one and then jumped back in. Correct me if I'm wrong.
Nope, that's right.
Well, you could have started a half year position. You know, through the pullback buy to jump back in if you wanted to the next day, and then add to it as it comes through the high. Given how tight this was, I think we just sort of waited for the confirmation. But yeah, that was a fine way to do it. Again, I would start my position there and then add to it as it's working. And this is another example of, and I'm sure we're going to get somebody saying, well, it's not up 10% yet. Yeah, but you know, on a 2% stop, you're up, you know, 3R. So this is where, and the stock's extended. Is it doing anything wrong? Absolutely not. Everything's looking great here. Nothing but confirmations. So if you're someone who wants to play for a bigger move, you're in great position there too. This is where, you know, Mark says it's your tree, it's your trade, it's your trade. How do you want to manage it? Tim's asking about PGTI. Half position November 24th, 2023 for 33.28. I was stopped on November 30th. Loss of 5.5%. Purchase half position of SP. Okay, reduce. Sorry, try to skip the question here, guys.
Yeah, this is long.
All right, let's take a look at the PGTI. First, he's just asking for a critique. Bought on November 24th. Yeah, he bought it perfectly. And I'm guessing this.
Stop on 30th.
Yeah. Yeah, this is just classic. This is called being a low risk directional trader. Here you are going to be a part of the occasional shakeouts. The question I would have is, why didn't you buy it back when it came back through here?
Yeah.
So yeah, I would give this trade a perfect grade. You did exactly what you should have done.
And this is a good example of when you do get stopped out of a name to, keep it on your watch list for at least another week or so to see how it shakes out. This one reset up and now it's ready to go. It's out.
Yeah, this is another, we call this a failure reset, where you get this shakeout. Well, when you see this kind of a close, and we talked about this, I want to say either last week or maybe on Monday as well, because we were asking about it, and Mark or myself was saying wanted to see it tighten up a little bit more. It got a little tighter, but when you were knocked out, you're a weak hand. We're weak hands. When the weak hands are knocked out, that's a good thing. Sometimes it happens to knock you out, but to Brandon's point, this is where don't take it off your screen. You've got to have a plan for reentry. Now, sometimes they just take off without you, and that's the risk again of being a low risk trader. But this is where you get back in the name, once it improves. But I think you did it absolutely right, and this has happened to me many, many times. Hazim Singh about Bro. On December 11th, got stopped today. My stop was 70, total loss of 3%. I always try to factor in a shakeout, but the action today seems so abnormal. I feel I should have moved my stop to 73.20 area, which is below the pivot and the 21. Do you agree that I should have moved my stop, or did I handle it correctly? I think you could have done either. I think you're referring to the original stop. Yeah, you was 72.35. No, 73.20. Yeah, if I was going to do that, I would probably stagger it. I would probably have tightened maybe half to here and half to here. We tend to stagger stops. But no, look, this is another one. And in some of these areas, I think what we're seeing too, even in a day like today, you're seeing sort of rotation where some of the names and areas that have held up well. And we talked about this with the sort of the brokers and the insurance and that group, they're being subject to profit taking. We saw that in some other names as well. But no, look, you traded it fine. And remember, guys, the ends don't justify the means. So just because you used a bad plan and made money or bought a lousy pivot and it worked, you don't justify the fact that it worked because that was a good idea because it worked out. And in the same with the last example, in this example, just because you used good tactics but got stopped doesn't mean then you forego good tactics for sloppy ones. And our win rates ours are below 50% historically. That means psychologically, I know odds are more likely my next trade is going to be a loser than a winner, but I'm not going to again use the ends to justify the means of getting out, but and get sloppy. Russell's asking about NetEase, saying what actions, if any, did you take in your portfolio when it came in on 11.24? I believe you were leaning on open profits. Well, I stopped out on this close. So yeah, this was one of the first. This is a good example. One of the first names we bought, and as it was coming out here, it was acting really well. So I started, we discussed this, use this to lean on it to take some other trades. Now, the irony was leaning on this. A few of the other trades started working faster than this one did, and then tightened up the stop. So this turned into a break even. I can't remember if the question was.
Yeah, didn't we sell in strength and had our earnings on this, or did we sell?
No, we didn't. Yeah,
Okay.
I think we just took a scratch on this. You can double check our trades on that one. But this is where you look at each trade. Well, some of the other trades, one of the other trades, starts working, a spot, a trade like this, well, it starts more than carrying other things. And this is where, the ability to lean on an open gain. Now, once I said, hey, I'm not willing to let this, and I was just to give you guys an idea too, we'd had this reversal. Stock got back into new high ground, on this day here. I'm thinking this low now is significant. This was earnings, and we'd gone through the earnings, so it was also in that regard.
Yeah, we had a decent cushion,
and this coincided with break even, so it just sort of all made sense to say I'm not taking a loss here anymore. Are you guys fully invested now? From Dan last Monday, I posted a question about having difficulty pulling the trigger and ramping up position sizes. I was about 15% invested only. I believe you mentioned that in this market, if things are working, maybe the next position buy should be around 15%. If that's the case, then I would not be building up my positions based on existing profits, as I don't have the profits. Should I just trust the fact that I've been getting traction on my smaller positions and take larger ones? We're fully invested, Dan, to answer that question. But the idea of, you answered sort of your own question. Should I trust the fact I've been getting traction on smaller positions and take larger positions? Yes. That answer is forever and always going to be yes. Now, I was using the example on Monday saying, and I think Mark had said, at 15% invested, the stock can go up 100%. And, if you're in 15% position, you're only going to make 15%. If that's your goal, fine. But, the goal here is, to turn the edge over and really compound returns. So you're going to have to take bigger size, was the point I was making. And I was saying, I would use the smaller positions. Even at a 15%, take one stock at 15%. If you get stopped out at 5%, your total risk to equity is less than 1%. I mean, that is, very low and very stomachable, or at least should be. Naresh, is asking about Fluor. Was it Bible above 39.10 today? Yeah, this is one we sort of, the best buy point was really right here. This was on Buy Alert. This thing just looks like a laggard to me. And even given the rotation that we've had, to some of the sort of laggard areas, I would expect this to be acting better. I just think there's much better ideas. Look, to answer your question, I'm just at 39.
I can measure it
down to this is mid-single digit, so it's tight enough in that regard. But I just it hasn't really gotten going. So I think there's better ideas. Another similar answer I think is coming up here, because Mark's asking about trend, and we talked about this. Why wasn't highlighted on the platform yesterday as breakout? It could have been. And this one, again, 85 relative strength, looks like a laggard. I like the base, and you've got a nice VCP here. And we talked about, this one as well. And the beauty of the focus list, guys, is you can trade off the list. And that's what we do all the time.
You guys should be setting your own alarms. I mean, you shouldn't really be waiting for us.
Service as a confirming, or pointing out things that you may have missed. And as a coach, and sort of someone on the sideline, helping you see, all the textures of the game as it's happening. But, you don't, just because the service didn't highlight it doesn't mean it wasn't tradable. And I would have absolutely, if this was, something a name I was interested in, I would have been buying yesterday right through this little pivot, and probably even use a low of the day stop, or you certainly into this area, and it's pretty tight here. So if that you're interested, that wasn't a bad play. David's saying coin looks like a power play up 100%, pull back at 12%. I bought yesterday 147.40 with a stop loss. Yeah, I've been actually have a position in this name. From down, bought this up. This was not really ideal. Took a sort of flyer on this one through this pullback buy. But you're right. Well, you're right and you're wrong. It has the power, but it just doesn't have. I was hoping this was going to tighten up even more. Stock is just continuing to rip here. Look, if you're going to play something this short, 1, 2, 3, 4, 5 days, this is exactly how I would do it, but I don't trade them this short. I just don't. But I would, if it just doesn't go, I would get right out. So I would have almost used yesterday. Was this an inside day? I would almost use yesterday's day as the pivot, where, you know, if it opens up inside, sort of quiet, comes through, you start your position. And I would either use yesterday's low of the day or the day before, meaning because you know the stock it's overcooked, it's really, really strong. If it doesn't keep going, you just get out. So it's sort of that you're on the platform, and if the train doesn't just take off, you step off.
I was asking about Monolith too, and about extended past the 20-day, and asking about, by definition, our power play is going to be extended.
Yes. And this is where context is everything. You're absolutely right. It's extended well beyond the 20, and that's what you want to see in the strongest, you know, power play type situations. But just to be clear too, for those of you guys who are new, power play, you know, has to double in 8 weeks or less. You have that here. This is your, you know, double in 4 or 5 weeks. Then it has to, you know, go sideways for a minimum of 2 weeks, and not pull back more than 20%, you know, 20 to 25% maximum. So you've got that here, you know, this pullback, like you said, only 12%, but you only had 4 or 5 days. So that's just too short for me. And doesn't meet the classical definition. Now we may get, that still may set up, you know, we may get, you know, maybe it pulls back from here, and then you get some type of a, you know, a cheat or a low cheat, you know, after, you know, another, say 2-3 weeks. I wouldn't take this one off the radar just because it's a little too short right now. This would be on what we would call a polls list. So it has the power. Now we see, can we set up a flag? Bought Shop on 12. 8 is a pullback buy. Thoughts? That is from Tom.
Yeah, this is another one that's just extended and hasn't really put in the time yet.
Yeah, well, and again, Tom, I think this is a creative use of the pullback buy, and this is if you're going to buy a name that's really strong, you're sort of trying to. And I see what you're doing here. You're buying. You're sort of buying. And this is where it's sort of the correct use of the pullback buy. At least it's trying to pull back to the top of the base, and you're sort of trying to catch it as it turns back up higher. And I would be tight on it. So if that's what you did, I think that's not a bad tactic, and especially in a strong market like this. Sometimes you have to buy these more abbreviated right sides to get some positions on. You just have to understand, though, you know, when you do that, it's not. This isn't ideal, but yeah, I think it's okay. And I like. I do like that you got a good close on 12.7. So yeah, I mean, your risk there is about maybe 2%, so pretty tight. Ed's asking, do you and Brandon ever disagree on a stock to buy or sell? And if so, who usually wins out on the final decision? I'm gonna kick that one to Brandon first.
Yeah, so Ed, usually if we disagree, we take it to the mat and we wrestle it out. And usually whoever wins gets the final say. No, just kidding. Yeah, I mean, listen, sometimes we do, but you know, when we talk things out, usually we come to, you know, a general agreement on what we should do.
Yeah, that's so rare.
I don't walk away being like, oh, I wanted to buy this, and Mark said no, so they're not, you know, that's not really how it works. It's really, we talk it through, and again, 99.99% of the time we agree on everything. But we talk it out.
I think part of that though too is like, first of all, we're so immersed in this kind of like style and philosophy that, you know, the risk of like me bringing an idea that Brandon's like, well, where did that come from? Right. You know, where look, you guys have seen this. Sometimes members will throw out charts that like, you know, I don't even see them because the relative strength's so low, or, you know, just not even on our radar. That doesn't happen here. So generally, if we have disagreement, it's in terms of aggression and how big to size something. You know, and this is where we just, you know, tend to be in a balance. If I want to take a big position, Brandon's like, I was thinking smaller, I'm taking the average of the two, you know. But yeah, those are rare moments. Let's see, MMYT from Vivek. Would you consider the lack of participation in the rally by MMYT the last couple of days a cause for concern? No, this stock's. This is a good example. I might have shared this last week. This was one that was high on deck for us, and I went to buy this name and missed it. So I went limit to buy what I wanted to buy and got 0 shares filled on this day. And I mentioned this, I think, on Monday. Sometimes when stock's getting away from you, I don't sit there. I mean, am I a little bit, annoyed that I didn't get filled? Sure. And I was hoping this was going to pull back. I really wanted to buy this pullback buy. I didn't like the outside day. I was hoping I was going to go inside and quiet down maybe a little bit more. I got we almost got too picky on it and missed it. But no, I would say, look, and again, put it in modeler. It's, you got 1, 2, 3, 4, 5, 6, 7, 7 days up out of 10. That's good action. You caught support here right at the old breakout. And you're, an eyelash from new high ground here. No, I think the stock isn't doing anything wrong. And you've got, this is a good fundamental story. It's good looking pizza merchandise as far as I'm concerned. Jamada is asking about APO pops and drops the last few days in normal. I'm not seeing, maybe you're referring to something on the intraday. I mean, this stock's pretty tight here. I mean, even this whole handle is, this sort of high handle it's putting in is, I would not call this volatile at all.
Yeah, I would say it looks normal. Normal right here.
Has it not, if you mean by poking its head out and then kind of coming back into the range, or, hasn't really broken convincingly into new high ground, but that happens sometimes. Sometimes, the stock, pokes its head out, maybe it sucks in a few retail people and shakes out, but that's fine. I think it's acting fine. Roberto saying, how do you integrate your overall risk, your open and closed profits into your decision-making process about the risk and position size of your next trade? Well, the same thing that we're always saying in terms of, where are we at? What's our current exposure, and what's our last number of trades done, and how much risk are we willing to take? It's sort of, that's kind of, in order of at least how we think about it. I don't know. You want to add color there, Brandon?
Yeah, well, I know we get this question all the time. And the one thing I'll say is, like, the longer you do this, you're going to get better at, feeling what the market's, doing, the pressure that's getting put on the portfolio. And it's like, yes, we know the risk we're taking. However, we know also we can feel the wind is at our back. So it's not so much we're so concerned about, well, we're taking, we've added 3% of risk, or we have, I don't know, 5% of profits. It's like, yeah, we added risk, but we also we're pretty comfortable with the idea that the wind is going to continue to push the stocks as long as things keep going the way they're going. Now, as soon as that changes, which we will see in the stocks we're in, and the stocks we're watching, then we start to pivot. But again, like, that's a feel thing. Like, so it's like we can increase the risk to a certain point, but we're more comfortable when we're seeing the things that we want to see in a healthy market, like we've seen in the last few days. I hope that makes sense. But
yeah, well, there's a, trading's an art, guys. We say this a lot too, and I always say, like, it's an art, but there are firm statistical, scientific boundaries to the art. But what Brandon is describing is the idea of, there's some feel involved in this. And one of the things I just described, the idea of, like, okay, stock's getting away from me, and other stocks I'm buying are getting extended, or there's a little bit of stock envy. There's multiple groups that are starting to work. These are all good things. The person who sees the rally yesterday or in the last 2 days and goes, oh my gosh, I'm not long enough, what am I going to do? And then just starts wildly chasing things. Well, then the market pulls back and they get stopped out and they go, oh, this doesn't work. Well, no, it's your tactics that are lousy, or, your feel for the game isn't very good. I can tell you right now, let's just say, hypothetically speaking, I hope the market does pull back 5%, and shakes even us out of a lot of things. And some of you are thinking, why would you want that? Because I think that we'll probably see an even bigger wave of setups. And these markets have a way of rhyming. After COVID, nobody wanted to buy the market and it kept ripping off the lows. I didn't really get super aggressive for another 2 months. And here we are 5-6 weeks off a low. And people are acting like they've missed the market,
Yeah.
like it's crazy. So you just gotta have to have some feel for sort of how these things, shake out. Mark talked about, I think in 95, he said he didn't even get back into the market till it was at new highs. And then all of a sudden he's trading all these power plays and different things. Well, look at the run. I'm just bringing up the Dow here. Something like the Dow has had. Yeah, this is a big run. What do you think this is going to produce when this does pause? More pivots, handles, other ideas. And as long as the breadth and the money is rotating, I think that there could be great opportunities. Then, of course, if the stocks, the index starts pulling back and people get stopped out of names, then no one will trust the setups. Which I love that scenario too. So, I'm again just developing a little bit of a feel, and that only comes with experience. Sorry, I'm trying to avoid going on a long tangent here. Eric's asking about NOW. Back to questions. On 10/26, he bought it, and at 11/7. 10. Yeah, I think we talked about this maybe on Monday. Would you consider today the first natural reaction? If you were trying to squeeze as much juice out of the lemon, how would you manage the trade from here? The real question I would have, Eric, is what pivot were you using? 10/26. Maybe you were buying, I guess, through here. The reason I wouldn't have bought this, just doing some quick, and down to this low, this is about 10%. So that right side looks sloppy to me. I don't know where the RS was at the time, but look, kudos to you. It's done really well. If you're saying, yeah, look, this is the first, looks like the start of the first, clearly some profit taking, at least in the short term. The stock's acting great. This is where you have to ask yourself, like, what's your goal in the trade? And if you want to be really tight on it, yeah, you can step aside. It's not doing anything wrong. What kind of trader are you? I would definitely not give it, more than the 50-day, that's for sure. But again, the distance from 720 down to 620, you're looking at a, 18-20% pullback just to get to there from the highs. So if that's too much, and this is where I would just make the determination, like I said before in some of the other examples, when you get in a name and it's extended, you got to ask yourself, what am I comfortable holding for it to act normal? Well, normal would be pull back to the 50. If you're not willing to hold the whole position, you trim to that point. Or if you're not willing to hold any of it to that, then you either pick a percentage and use that as your backstop and just say, listen, I'm not willing to give back X, and that's it. If you've already hit that, then you're out. Tim is asking about Shark Ninja. Yeah, this one sort of been on the secondary watch list. We thought about sort of adding it back yesterday. It's a little funky on the right-hand side, but, if I was going to trade this, I would have probably started a position through, sort of as it turned up yesterday, just not developed enough. I think, again, we may get another opportunity with this one. You're saying it broke through 50 this morning, which I thought was good. Well, anytime a stock moves higher, if you own it, it's theoretically good, of course. If you're going to play, that pivot, I mean, this is tight enough. But yeah, like I said, especially running into this big reversal over here, I'd like to see it a little bit tighter, or I would have, maybe tried it, yesterday, as I said, at least started the position there. See, Joey's asking, understand you went to the first MTP in 2010 and the initial years after that, or the initial years of your trading, did you feel comfortable initiating concentrated positions? Like 20 or 25% of your account? I have a tough time taking such big positions because of my fear of drawdowns or lumpy performance. But of course, this gets in the way of moving my account. How do you think about this? How can I improve? Well, to answer your question, yes, certainly. Sometimes I've never gone more than 50% in any one account. And even then, that was really only in the early days. Now, I know we've got members that, take even bigger positions, and some shorter term traders where there's liquidity will, or some of you guys in the contest accounts are being very aggressive. listen, Joey, this is a function of experience and personality. The more experience you get, the bigger you, the more comfortable you'll theoretically get with bigger sizing. But I don't tend to be a cowboy where it's, the idea, like, oh, I just want to take big positions. That's not how I see it at all. In fact, I don't want to take positions at all unless I've earned the right to take big positions. But you're right in terms of if at some point you aren't willing to step it up, you're either going to have to do a lot of trading, a ton of trading at really small size, if you want to achieve, some form of super performance. But in terms of, how to improve, the biggest thing is, take the emotions out of it. Let the math work its way into the trading. So if you take a 20% position with a tight stop, can you stomach a 0.5% loss? If you can't stomach a 0.5% loss, what are you doing in the market anyway? You should be in, I don't know, some type of bonds or, and your idea of lumpy performance, I'm not sure what that refers to, but there've been periods of time where I don't, I don't make any money. But the idea is, again, you want the alpha on the upside. We want alpha, not volatility. So, where I don't mind going sideways for an extended period of time. Then I expect to break out in terms of, my performance moving higher. So if that's what you mean by lumpy, I would say that's what your goal should be, to have periods where you don't do much, and then periods where you do a lot and hope to make a lot of headway. So. Pratyusha is saying, I'm struggling with entries taken at the start of the day as the moves are fading toward the end of the day. Those stop losses are not getting hit. How to cope with this? It's eroding my confidence. If you're referring to, just buying something and it not just going up all day, or maybe, following through the way you want, well, that's just part of trading. The real question is why, again, not a psychologist, but why are you so obsessed about it having to necessarily go your way, on day one? As long as it isn't doing anything wrong, you stick with the trade. And as long as you're using good solid criteria. I don't know, Brandon, any?
Yeah, I'm trying to think like what else I could add to this. This is why we have the stop losses we have, because not only do they make mathematical sense, but they also make sense on the chart most of the time, as far as like, hey, if our stop gets hit, then this, we want to be the last week holder. So to Marky's point, we don't care. We buy, as the stock breaks out, you buy it, it pulls back in, and who cares if it rallies that day or in 2 days, right? That's what we're looking for, and that's just sometimes how the market acts, where it's not, yeah, we get periods where stocks break out and they don't pull back. Well, that's rare, right? Most of the time stocks fluctuate before they, be accumulated again we want to buy stocks that are being accumulated by institutions. So sometimes, that takes a couple days.
Go for another 5 minutes here. George is saying APO was buyable pivot this morning. I bought and sold half when it squatted below yesterday's low. Yeah, I mean, that's really tight. And if you're going to trade, that way, just know that you're going to have, you're going to have you're going to be doing more trading and have to trade around positions more. I don't like this one particularly, in a situation like that. If I was going to buy something with a low of the day, I would have chosen maybe this pullback buy here, just because, again, everything in context. If this VCP is sort of forming right here and you caught some support, on this day and this day, I would expect it to turn back up and get going again in my favor, which is what it did. So I would have either used this day here's action, or this day for sort of a low of the day type pivot, where up here, you sort of had a failed kind of little pop out breakout attempt the day before. I wouldn't call it wedging, but where this would just be totally normal for it to undercut that and go sideways, which is what it's doing. So I don't mind using tight stops. We prefer that. But again, I want to do it in a place that kind of makes sense, where I think the trade is now turning back in my favor and I can use that tighter stop. Joey's asking, when you guys say jockeying for positions, does that mean getting in and out of a position before you settle in with a stock? And if that is the case, do you manually get out quickly if you felt that you did not get a perfect entry, or you get stopped out before re-entering when the chart looks better for another entry? And how many times do you do this usually? I don't know that I'm exactly sure what you're referring to, Joey, but when we say jockeying, and this, sort of the horse racing term where, the horses are sort of in the pack trying to find their position, where then they can really get aggressive and sort of make a move. It's more of jockeying in and out of, it can be the same position or it could be other positions where this stock didn't really follow through, didn't go the way I had thought. I'll sell that one in favor, of maybe bumping another position. Or it's really more of, if I don't want to add more total risk, but I want to add another name, well, what do I have to do? I have to jockey somehow. I either have to, sell part of another existing position, in order to finance that. Because if I'm not willing to just add more risk, that's where, kind of got to jockey. So I don't know, Brandon, you want to add something?
I think you covered that pretty well.
All right, let's do one or two more. Anders is asking about FN. Please assess my trade. I bought it on December 11th, set the stop at 159. Bought it perfectly. Coming right through this low cheat. We talked and set your stop here. Exactly right. I think that's great. We talked about this on Monday as well. We had questions of people saying, well, why wasn't it added? Why can't you buy it? And we said it's buyable. It's a low cheat. Sold half today through the high as it got extended short term, and I'm at my short term equity high. Am I selling it too prematurely and choking the trade? Well, no. If that was your goal, here's where I like what you did. One, look, you bought the low cheat perfect. There's the first thing. As far as this was about a $9 stop. Call it 6-ish%. 5-6%, something like that. You've sold it right in a new high ground. Now, this is where the reason I would have graded this low cheat maybe a little bit lower, was that I would have liked to see this be a little tighter. But here, so what you've done is you've taken a 2-to-1, and the stock is now running, into a spot where it may stall out, sort of at these old highs. And I love doing that. Sometimes you kick out the whole trade right there and then wait, does it set up a handle? Do you get another pivot? Or in your case, you sell half and, you're sort of in that psychological win-win. It continues to rip higher. Thank God I have half, it pulls back and comes back in. Thank God you took profits on half. So I think you've handled it just fine. And the entry was good. The plan is good. And to your point too, okay, hey, the market's short-term extended. I've got a few profits that I'm at multiples of my initial risk. This is exactly where you de-risk them. DW is saying I sold quiet, maybe means quite a few stocks this morning, as I think the market's extended. I sold some of them is not because they have problems, but they went sideways for a whole, or I don't like them. Does this sound too emotional? I always feel unease in terms of selling. Well, I don't, you're going to have to provide a little more. I'd prefer it, DW, if you gave us examples of which stocks you sold. Listen, when the market gets extended, or you get that feeling like, wow, I've got a lot of stocks and I'm at multiples of my risk, then you're absolutely right. Yeah, you've got to look to potentially, trim some. And this FN example, on the prior one from Anders is a good example of how I would do it. I would look across the portfolio and go, well, where are we at a multiple? Where can we de-risk some things? And, just either stick that cash away and, waiting to see, do we get more setups or additional pivots where we can then, redeploy it and put it back to work. As far as, I can't comment on whether or not you're being just too emotional. If you're selling things that aren't extended just because you're nervous, I would argue you're probably being too emotional. Let's do one more here. If a stock is up, this is from Zach, if stock is up 5% or more in the day, but it's just now reaching the pivot, maybe 1% past, would that still be a buy, assuming the base is not too short or too loose? Well, it's a hypothetical, so really want to see the example. Generally, I don't like buying a stock though that is up 5% and is just now sort of coming through the pivot. It just tells me that the pivot's wide.
Yeah.
But if you had an example, we could look at it, maybe more specifically. I'll do one more here from Naresh. Can you share your thoughts on Tesla? Tesla to me just looks like a laggard right now. 76 relative strength. I know this is former, darling from the past. Still, not running into a ton of overhead, but this is now getting a ways back. But again, 76 relative strength. It's 50s in a downtrend. There's a lot better looking merchandise. This to me would probably need to have a big move up and set, where the relative strength it can start to show that it's really under accumulation again in order for me to get interested. So, all right, guys, past time here. I know we didn't get to all the questions, but we got to quite a number. So for those that we didn't, save those for Monday, and obviously monitor the platform for updates. Look for the weekend video, and let's see if we continue to see just net progress here in terms of the focus list and open positions.
All right, take care, guys.